Good afternoon, everybody. How's the sound out there? You should be able to hear me. This is Paul. Welcome to today's DTS event for educational purposes for DTS members. How are you? Sound is great. I love the adjective. Adjective, yes. Good. All right. Everyone else, you out there? Want to give us a nice big hello, especially if you're newer? Tonight is called, I kind of struggle with the title here, as you can tell, Common Bad Habits That Plague Traders. The little blurb that went out was something like this. A list of well-known common bad habits will be reviewed. Some so obscure you may not have considered them. Possible solutions will be discussed, and lots of chart examples will be used. I'm going to show you the list here, and we'll take a moment and just kind of stall on that because I think the list is a valuable list just to see. But let me, just for fun here, I don't normally read this slide because it gets emailed to you, but in working with traders over the years, I found that there are tremendous commonalities both in success and failure. There are often bad habits that develop that eventually lead to failure that many traders don't even realize they have. At least they don't realize it at the level they need to fix the issues. Oftentimes the first step to fixing the issue is to fully understand what you're doing. It's quite likely during this event you will be listening to and say at least once or twice, wow, is he talking about me? When you realize that you are not alone in what you are doing, it is the first step to fixing the problem. I will go over some procedures to help fix the potential list of bad habits. Me, Paul. Today, when I do these events, there are a variety of things. Some are very technically oriented. The last couple were very technically oriented. We went over a lot of trades and trade examples. This one, I usually pick the topic on Saturday, Sunday, over the weekend, Friday sometimes. And this one is kind of a combination of things. It's a variety. The bad habits, I kind of ended up picking what I think the top ones are. And here's the list. Let's take a look at the list. I picked eight. Eight not so obvious plagues. These span the range from technical habits to learning review habits to psychological habits. So we're hitting all over the place here. So this is a little softer, meaning by hard, I mean more looking at charts and looking and winning and losing trades, that type of thing. The last two have been very focused on that. So this one is not so much. And I want to say something in all fairness, because I'm very upfront and straightforward with everything. And the last couple of events I did we were very much looking at trades. And when I look at trades, I always take the trades from that week, the day or two prior is what I'm always doing. Unless I need an example, I may go back to the end of last week or something. And the last couple of times I was almost embarrassed because we had just really tremendously good days or a couple days. So I didn't even say there was, boy, don't expect those results every day in the room. They were great. And I said every once in a while, I just may have a off day or two going into the thing. And I kind of have that right now. So as I look at some of these trades today, we don't have a lot of charts today because there are only, there are two or three examples. But I used an example of a losing trade I had. I used a couple of examples of a small winner, one winner. But I had a losing day. I had a good day Monday, losing day yesterday and today. And just not swinging right, just not catching the right patterns. So it'll come back, but I did not have those big winning days the last 2 days here. So just want to bring that out so you don't think I'm just always showing off the good stuff. Here's the list. And I think this is a valuable list to stop and look at for a moment because it is, from my experience of working with people for a long time, and naturally if you stop and just ask the question just generically, what prevents people from being successful as traders? Well, obviously it kind of depends, well, where's your starting point for the question? Because naturally you can go back and say, well, if nobody gets an education, maybe that's the reason. But I'm not shooting at that. I'm not saying that here really anywhere. What I'm saying is, assuming that you're in the arena here, you've gotten some kind of education, whatever it is, and there's still struggles that people seem to go through. Who's here listening to me tonight? Well, I'll tell you the variety. There are DTS seminar program members here, right? Full-fledged students that have learned from me. There are people here that are perhaps trained somewhere else and feel that they're doing well and they're just here because they like listening to what I have to say. There are people that are what I would call maybe partially trained, like maybe they've collected some videos and read some books and that type of thing, which to me is not being trained. You're more in the category of you're training yourself when you do that. And there's some people who are looking to train themselves, which as you know, I don't put down at all. I think it's a worthy effort to try and do that. And that's one of the big resources you have through here is the free stuff page, which is, as I said, I believe the biggest, greatest source of free information about trading anywhere on the internet. I'm sure most of you are familiar with it. If you go to the DTS homepage, you'll see it off there to the left, but here's the actual link right to it. And there's also a big group of people that maybe ends up filling in a big part of the group that's usually here. And that is maybe people who aren't quite sure what they are. They're just kind of coming in, kicking the tires. They've seen something about trading. Maybe you want to just manage your own money, and you're just here to kind of see, what's going on, and maybe you'll try and pick up some tips on your own. Maybe down the road you're thinking you will get an education somewhere, maybe here, whatever it is. So there's a wide variety of people out there. So naturally, this is not at all in any way addressed to you to say, oh, you got to go out and get an education. One of the things here talks about one facet of that, but these are just things that once you start trading, whether you have a little education, self-education, fully educated, these are things that can still prevent you from being successful. And these are what I feel are 8 of the more obvious things that I see that continue to hinder people's progress. How do I have the right to say what this list is? Well, it's simple. Number one, I've been helping people learn for years. I've been teaching people for years, and I get tons of emails, not just from my students, but I get tons of emails from people who are non-students, who are just free members and want to ask me a question. And I see, based on their questions, I can often, see very common questions coming in from varieties of people. And I kind of get to see, sometimes there are things like I just wouldn't think would be an issue, like maybe it was something that I didn't think was an issue, but I keep getting emails that are the same thing. And then, of course, also I run a trading room where we have, a group of kind of core people that are there most of the time, and then there are a bunch of people kind of come and go. And as new people come in, you kind of get to see what they're suggesting and what they're thinking. And, of course, I do the free events like this, and we do that scanning night. And when I do scanning night, I get people suggesting things to me that are everything from some really good stuff to some really, I don't agree, but maybe okay stuff, just some stuff that is just terrible. It's all over the map. So from all that, I have a really good sense about what I think makes stumbling blocks for people along the way. So here is the list, and it's an obscure list, and it hops all over the place. I did not group these according to these 3 categories up here, but I'll mention them as I go, and on each slide they're also identified. Being shaken out too often. We'll talk about what that means if you're not familiar, but it means like getting stopped out of a trade and then shortly thereafter everything would have been fine, but you're out of it and you lost your full allotment of money. This is obviously a technical thing when we talk about being shaken out of a trade, and it has to do with your entry/management. Not just your management, it could have to do with your entry as well. Number 2 is entering trades so late that you need record moves to make money. This is a technical issue also, and it comes from strategies. Your strategy, your entry, how do you enter something, where do you enter something? And I'm actually going to show you on this one, I'm going to show you an example of, a bad entry that I did today. I already looked back and said, what are you doing? Exactly what it says there. I needed a really huge move to make money, and you just don't make money generally doing that. Number 3, glued to the screen or anxiety after entering the trade. You enter the trade this is kind of more as a day trading issue. All these, I try to make them apply to both long-term and short-term, but some of these are, these first 2 are long-term or short-term. It doesn't matter if you're on a weekly chart managing your long-term money. You get shaken out, trades too late. Being glued to the screen is more of a day trading thing, but it has to do with over-managing. And yes, you can certainly over-manage long-term positions. Jumping, so that is a more of a psychological thing, usually, but it may, listen carefully to this one, even though it may be in the group of a psychological issue, a lot of psychological issues happen because you don't understand the technical concepts, right? Does that make sense to any of you? I need some water. Does that make sense to you that psychological issues often develop because you don't know the underlying material well enough, right? I talked about this before when I would ask you guys about public speaking, right? And I asked some of you if you ever speak public, like I do. I speak all the time, and it's on the internet, but there's still, we typically get about 80, 90 people here by the end of the night. And I've talked in person before to huge groups, in my past about trading and investing. I've talked to I had a forum of about 300 people one time I was talking to, and I have no nervousness at all, just absolutely zero. Enjoy doing it. Absolutely. Because I know my topic flawlessly. There's not a question anybody could ask me that I would stall on. If anybody disagreed with me, I could shoot them down on anything I want to say. But if I didn't know my material, if you made me do a speech in front of a group of people about how to prepare French onion soup, I'd be a mess because the psychology would creep in because I don't have the underlying knowledge to know what I'm saying. So to the extent that you become more and more knowledgeable, more and more confident, guess what happens to the psychological issues? They begin to disappear, right? But to the extent you're winging it all the time, you're not sure, and the psychology really creeps in. Number 4, jumping from one webinar to another. Now, this isn't just in educating yourself, whatever. And I'll talk about when I get there. I just have one comment to some of you. Now we're back to a technical thing. We're just hopping back and forth here on purpose. Going long on a breakout. I had a lot of computer issues today for some reason, and I'm dealing with a lot of stuff today. So I did most of this last night, but I didn't really proof a whole lot. So you're going to see some typos as usual, but you can always laugh at those. Going long on a breakout, there was a short instead of it was a short on the breakout. I'll show you an example. Here's a good trade I did on that. Not reviewing what you do, reviewing what you do, and not changing what you do. And I know these two are boring topics, and they're going to be very quickly talked about because they're kind of the part of one or two of a couple of recent events, so I'm not going to reiterate everything. But they're just such huge topics. Being dragged into a spot where you are trying to maybe break even, and I'll explain that when I get there. So here we go. Let's start. And number 1 is going to be being shaken out too often, a technical issue having to do with management. Most traders have a failed belief that breaking support is the correct exit to a long. Question for you all. Statistically speaking, when an uptrend ends, what is the next most likely trend? Right? In other words, there's different strategies and different things to be doing and different stops to what you're doing. But obviously, if you got in an uptrend or something, and then you stop out because that uptrend ends like that, right? But statistically speaking, after an uptrend ends, let's say that's the break of the uptrend, what is the most likely pattern to follow? Yeah. The most likely pattern is to go right back in an uptrend. If you're calling that the uptrend break, I mean, if you break the last pivot, and again, from where you come from what you read, what you believe, you can have all different definitions of what an uptrend is and what uptrend break is. Nothing is that crystal clear. Like you would never short an uptrend break. As a matter of fact, like I just said, the smartest thing to do just statistically speaking, is to go long after an uptrend break. So to get out there doesn't really make any sense, right? So, and this whole revolves around the concept about, being shaken out too often. It depends on the pattern, but many are getting out when they should be getting in. I'm not going to ask you to raise your hand, but I'm sure many of you can relate to that you'd look back and you say, wow, I exited that thing at the perfect entry to get long, and here I got out. At least if you see that, at least you're looking back at your trade, so that's something positive. The answer lies in understanding the choice of entry strategies and using smart entry-exit numbers and managing stops properly. If you're doing what the masses are doing, you'll be a victim as well. What causes a shakeout usually? What causes a shakeout usually? This is car yesterday. What causes a shakeout usually? Not really fear. No, it's not market makers, and no, they have other stuff to do. I mean, there's this thing out there, everybody thinks that market makers are trying to take people's stops and that the HFTs have the sole purpose of taking your 100 shares. I mean, HFTs have such competition. I mean, you don't see that happen much. But whatever causes it, all it is that everybody in the world has put their stop in the same spot. That's all it is, right? And if some selling comes in and you just happen to break that area and you trigger a stop or two and that triggers another stop or two and you get that little snowball effect. And yeah, sometimes, I mean, especially on a thinner stock, I mean, you can have anybody come in and sell 5,000 shares and it could break the bottom of something like this. On a more higher volume stock, it's not easy to do that on purpose, certainly none of us could, but normally it's not happening on purpose, it just happens. But you get that sudden surge. But if you're in a strong chart and the stops get run, the weak hands, so to speak, get out and there's nobody left selling, right? Because you're in a strong stock. So here's the shakeout thing. This was car yesterday, late morning, going into the afternoon. Had this nice little consolidation. Boom. It ran the stop, 1 hour's worth of trading. That's a 2-minute chart. And took out the bottom of that area and, it ran some stops and boom, boom, boom. Everybody got out, and then of course that set the stage for it to go higher. And I actually traded this. Now, this is a perfect entry in this case. Now, can somebody tell me, again, this is not all about learning charts tonight, it never is at these events, but what about that could you quickly tell me would say that is a perfect shakeout? Now, I was watching I didn't see it at this moment. It was lunch, I wasn't sitting here. I would have entered there because I was looking to get in this long. I would have taken that. Absolutely, because it's a perfect shakeout. But the other good thing about a shakeout is once you have the shakeout, you can trust the breakout. More likely going to work because you've already tested the stock lower and you've seen what it wants to do. But can anybody tell me what about this? This is just kind of a, technical analysis 102 question, not 101. Right, perfect, Stephen. Minor support. Well, John, the bottoming tail is after the fact. I mean, when you're falling, John, when you're falling, there is no tail yet. What would make you look around? And it's because it's a strong stock that has minor support. There's this big base to the left. This, in essence, was kind of a breakout right there. So you have this area that makes a nice little kind of cushion. So you have this, you don't see the whole chart here, but I mean, you got enough of it to see that is the best support area there is in the market, right? So that is a shakeout type of thing. So there's several lessons there. Is number one, you have to question, if you got in here, you have to question that entry, number one. Number two, if you got in here, your stop should not be here. And number three, regardless of where your stop is, you should consider managing this in such a way that you're in positions like this when you see what's coming. And number four, once you have this, even if you're not part of the trade, whether even if you did not get in or if you were not in it at all, it's more likely that you can trust this breakout here. And this actually, when I get into it, it went up about a full hour almost. I didn't sell it there. I was being piggy. I ended up just taking a small profit on it, but it was a nice little chart and a good example for what we're doing here. You'll find this fairly often, and let me phrase it this way. My favorite entry, my best favorite entry to any kind of sort of consolidation or even a buy setup. Buy setups can shake out too. You don't have to have a base. You can have a buy setup, especially in the morning, right? You have a little buy setup in the morning and it comes down and then it tries to go and then it shakes out. And those are good entries too, if you have the right pattern. I mean, just anything that, runs some stops is not a long, obviously, but if you have the right pattern, it can be good. My favorite entry to any of these is the shakeout when you can see it. You don't see it very often. That's the only problem. What about this? Made it? We answered that question. You guys did a good job. All right. So that was number one. I think that hinders people a lot in that they're in potentially good trades and they're constantly getting out. In the last event, and by the way, the last event was very late in being posted. It didn't get posted yesterday, so it was emailed to you as well. It's a great event to look at. We talked about that concept in there a little bit, and I think that's the event where I asked you the question, what is commonly called the number one reason new traders fail? And most of you said, well, not following your stops. And then I asked you, what's the reason most next level traders fail? And the reason is because they do follow their stops. Taking your stops is one of the biggest reasons for traders to fail. Don't get me wrong, you have to have stops, but most people do not enter positions or use stops properly. And I'm sure most of you right now, if you haven't heard me say that, you're probably thinking, wow, I've always kind of thought that, but I didn't think I was even allowed to say that. But it's true. Stops are probably one of the biggest killers for traders out there because they're just used incorrectly. All right. Number two, entering trades so late, you need a record move as to make money. And this, again, everything here, this is kind of a highlight film of what I think the top 8 things are. And, I've been doing these for over 4 years, so you're going to say, yeah, I've heard this comment before somewhere. And this is, there's a whole event called Make Your Money on Ordinary Moves, which is about this topic in general. So if you like this topic, there's a whole presentation about this. But entering to trade so late, you need record moves to make money. My thing is you have to make money on just normal moves. And if you get a really exceptional move, that's just gravy. But you don't actually get exceptional moves very often at all. People always look at charts at the end of the day, and they look at the high of the day list, the low of the day list, and they say, wow, look at these huge moves. I got to learn how to capture these. But you're looking at 10 out of 2,000 stocks, and you're not going to find them very likely, right? Late entry to a trade finances the exit of the early. Yeah, exactly, Chris. Yeah, I kind of say that in so many words here in just a minute. With only a vague knowledge of what you're looking at, traders default to the lemming mentality. Is that the animal, lemming? I just kind of winged that. I'm not sure it's how you spell it, but those animals that, if one jumps off the cliff, they all jump off the cliff. And there's a certain psychological thing, if you're not sure what you're doing, you want to make sure that all the other traders are doing it first, right? It's like traders that go into chat rooms where they're all just talking with each other. There's, nobody running anything. So, what do you think of this? What do you think of that? Well, who cares what any numbnuts in the rooms thinks about anything? They're just all throwing out stuff. It's the same thing here. You're in a trade and you want to get in. And you want to wait for every trader out there to get in, and then you get in. If you take that to the extreme, it would mean that you would be the last one in on a long, and you could only lose. They want to make sure everyone else agrees, as shown by the buying that's already come in. We have to be better than that. That buying that's coming in has to take us to a target. We have to recognize the areas and react at the first little sign of the door being cracked open. And then we got to be the second one through the door with 100 people behind us. And those 100 people carry us to our target, not the other way around. But this is one of the most common things. And it can plague anybody in the moment. Long-term, I'll give you an example of how day trading is a little different. Long-term trading, I'm going to say I've never been guilty of this. Not in 4 years. I mean, not in years. I've never been guilty of this day in long-term trading. Never. Day trading, once in a while I screw up. I have a chart I really like. I didn't get the right entry. I'm mad I missed the entry. I'm like, okay, well now with this entry, it's certainly going to go higher. And then I look back later and I realize, wow, look what you did. I mean, you got in halfway to target one. I'm embarrassed to show you this, right? How many people would show you this? Here's today's trade. I got in FCX at 950 at around 952 with over 3202. That's where it is in a chart. I mean, if I didn't look at this chart again, if you just asked me where I get an FCX, didn't show me the numbers, I would have said, oh, right down here somewhere. Yeah, it was right down here. Yeah. Well, yeah, that's where I wanted to get into it. And I missed it. And I goofed around. And then it did this. And then it pulled back. I missed the pullback. And well, all right, it's certainly going to go high over that topping tail. Well, yeah, it did. It did go higher. I didn't make any money on it, though. I ended up raising the stop and, took a reduced loss on it. But it hit the high of the day, 10 minutes after I got into it. That's a terrible trade, right? The trade, if it exists, is getting this retesting bottoming tail down here. That was the goal. And look how far off I was. That was terrible. So there's an example of me doing it today. I don't need to pull up any make-believe idiot trader. I'm the idiot today on this trade at least. It made sense in the sense that I thought this could go to 3270. That was the gap fill. But I'm guilty of exactly what I'm telling you guys. That doesn't happen that often. That's a rare event. So I was justifying this late entry by saying, well, it could have this great move today. That's not how you trade. You don't hope you get the great move. You know you're going to get a typical move and make money. So that's number 2, entering, or what are we on, 2 or 3? That is number 2, entering trades so late you need record moves to make money. Here's number 3. Glued to the screen or anxiety after entering a trade, a psychological issue, usually. Just a forced trade? Well, yeah, same thing, just different words. Whatever you want to call it, it's a terrible trade though. Entering a trade, glued to the screen or anxiety after entering a trade, a psychological issue, usually. When you enter a trade, you have the safety net, right? It's called a stop. Traders who constantly stare at trades leading to overmanagement often do so because they don't know how to manage, which would be a technical issue, right? That could be the root cause. Or know how, but refuse to follow the rules on their plan due to fear and lack of confidence. That would be a psychological issue, right? If there is nothing you're allowed to do for 30 minutes, or depending upon the trade you're taking, maybe there's nothing you're allowed to do for 60 minutes, 2 hours, 5 days, why are you sitting there stressed out with your hand on the mouse? And don't tell me you don't do this. A lot of people do this. Maybe some of you don't. But you understand my point. Let's say you're taking even a 5-minute chart, which to me is a fairly quick time frame, and you're taking some kind of 5-minute buy setup or something at 10 o'clock maybe. Well, from the normal trades I'd be picturing, with few exceptions, if you got in and you had your stop in place, there really would be nothing you could do that trade for about 20 minutes, just generally speaking. In other words, there's your stop, boom. One of the things I like to say to seminar students when I'm teaching is to say this as a psychological thing, is when I get into something, I kind of, in my mind, pretend that stop money is spent. It's like I just spent it to buy this trade. It's gone. And my goal is not immediately to see if I can somehow, reduce that loss somewhere. Because again, like I've said in other events, if your goal is to try to minimize your loss from the minute you get into a trade, you will achieve your goal, I guarantee you. And you're going to have a whole string of minimal losers. And you will last twice as long as the average trader before you burn out and, well, not the average trader. You'll last twice as long as a trader who doesn't minimize their losses because you're going to have smaller losses to deal with, but you're never going to make money. So you have to get past this. How do you avoid the anxiety of that you have sometimes when you're in a trade? Well, number one is accept what I just said. That is the fact that you have to look at that stop money as being kind of spent. Don't expect to get it back. I also look at it this way. You know, if you really do a good job preparing for long term or for day trading, whatever it is, and let's take day trading. You spend the night, you do some scanning, you find some things you like the next morning, you put your favorites together, you see what the market's doing, you see if your stock's gapping a little bit or not, you wait for this perfect entry, it comes down to the perfect area, you get your entry criteria met, and boom, after all that work, you're in a trade. And then 30 seconds later, you're thinking about getting out because you don't like it. It makes 0 sense to me. It makes absolutely 0 sense. It's like people, when the trade kind of takes off a little bit, maybe they miss it initially and then it comes back a few cents, or I go, can I still get into it? Well, yeah, of course you can. I mean, we think 13 seconds later, because it pulled back 6 cents, that it's falling apart? I mean, you can't judge charts like that. It's just ridiculous. So glue to the screen or anxiety after entering a trade. It can be the root problem of just not knowing what you're doing, not having a plan, not having confidence. Confidence is a big word because that's something that helps avoid the psychological issues. But it could also be that you know what to do and you have the plan and you just simply can't get yourself to do it. Psychological problem, right? Know how to manage. Make it into a plan for each strategy. Check yourself. Track how much money you are losing by over managing. In other words, go back and look at, I've said this before, go back and look at what you've done and see, you know, did you actually manage the way you're supposed to, or did you step in and goof up trades? Again, if you pick all bad strategies, you'll be proud of your over management because you will lose more slowly, which I guess if that's a goal for you, congratulations. But if you're picking relatively good trades, over management as a rule, by definition, has to hurt you. Watch the last DTS event. There's a lot about this topic in the last DTS event. Next topic is a learning issue of no focus. I just want to bring this up because I find this a lot also, just talking to people. And you know, I'm very laid back and I'm, you know, you want to teach yourself, I'll even help you a little bit to the extent that I can. If you don't like me, talk to me before you go somewhere else. I know people, I can, you know, at least give a thumbs up to a couple people or tell you no, stay away, that type of thing. But a bad thing to do for an extended period of time is to just keep hopping around like to free event to free event to free event. There are different ways to make money, and it's good to initially get a feel on how you want to learn, if you want to learn from someone at all. But eventually you have to pick a style and embrace it. You can't just keep hopping to different events and picking up little tidbits and thinking it's all going to somehow coalesce in your brain into a tradable system. It just is not going to work that way. Better is to kind of hop around, see what you like. If you're then going to try to train yourself to then hit off that person all you can. Like if you're here, you go to the DTS free stuff page all that you can. But get to know the different people you're looking at or companies you're looking at. One of the benefits that I think of the DTS free stuff page is if you want to get to know me, there you go. I mean, when you hear me talk now in this event, there's a zillion other events on the free stuff page, along with a lot of articles and other educational information. And that's me. You get to know me, my style, my personality. Not everybody likes me. You don't like me, that's great. You know, use me for what you want. Go do whatever you want to do. The only little word of advice I give you is I would just really stay away from bigger companies. I was with one for a while, so inside information, ding, ding, ding. Not the place to be. I mean, you don't unless there's the person there that you can hook up with. But generally speaking, you're going to be learning from somebody, you learn from somebody, you learn from somebody who probably really doesn't even know what they're doing. And you're also going to be taught all kinds of crap you don't need to know so they can sell more stuff, to have bigger webinars, and all this, the whole thing. So just a little heads up for those of you that are still walking that fence between how to learn this on your own, hopping around, because I know a lot of people do that. So do it for a purpose, and then at some point, make up your mind what you want to do. The grass is always greener on the other side. Somewhere I wrote an article about this, and I went to present it to you guys, and I couldn't find it. I'll have to take a look for that. It was a good article, and I keep referring people to it. I didn't see it, but I was really in a hurry when I looked for it, so we'll see. One of the reasons I have the free stuff page allows you to get to know me very well, the events, how I teach, get to know your mentor and trading style before committing to learn, and don't be a professional seminar junkie. Professional seminar junkies stay seminar junkies for the whole career, and they never learn to trade. So, do it with a purpose and then figure out what you want to do. On to the next one. Back to a technical issue, strategies. Going long on a breakout, there was a short on the breakout. Many new traders to the market, or anyone that doesn't really understand charts, thinks that technical analysis doesn't work. The belief is usually brought on by a lack of understanding technical analysis by the person himself. There are often significant differences in charts that the untrained eye is blind to. I've seen so many traders say that their breakout failed when they were going long at the moment a properly trained trader would go short. And wouldn't you know it, I just happen to have the perfect example from Monday. Ready for this? We have this sideways, this is AA for Monday. We have this sideways consolidation. You see it here? High 47.65, a lower high 47.53, boom, boom, boom. And here we have our breakout. That bar closed at 47.70 and heading higher, right? Good breakout. Get in there long, maybe make up a stop, throw the stop down there to the bottom of the base. We like the breakout? It's an unfair question because you're not seeing all the charts. If you saw all the charts, but number one, regardless of whether or not this is a bullish or bearish setup, you never go long here, unless this is a 5-minute chart. Unless you were, even if this was a bullish setup, and again, actually you can't tell from one chart, so it's not fair for me to ask you, but it was not. But even if it was, you would never go long there. You'd never go long at the top of a wide base, never, unless this was a daily chart you were playing. Right? Unless it was a daily chart that you were playing. For me, it's hard to go long anywhere up here, Mike, unless it's the whole next entry above the base somewhere. Obviously, if you were thinking long, you should have been long down here. You had a couple of attempts to get long down here. But this is the type of thing I see all the time where people say, oh, I took this breakout and it failed. Well, just to make my point, not only did this breakout not fail for me, I shorted that breakout. Tuesday, Monday around 2 o'clock. 17 cents past the 1230 high failed break. I shorted it at just before 2 o'clock at 47.57, and it quickly dropped to target 147.03. Now, it never went lower. The bottom of the base was all there was to it. I only took part of the profit there, so it wasn't any home run trade. But you see the point. I'm not just picking out a chart and saying, oh, gee, you should have known to do that. I shorted that breakout, right? I shorted the breakout because this is not a breakout in DTS language. When I talk, sometimes I kind of say quote unquote breakout, meaning I'm just using the English word the way people use it, the way people, non-trained traders talk. Anything that was sideways is a breakout now, and that's not true. Some sideways patterns cannot break out. There is no concept of them breaking out because they're meant to go sideways. If it's meant to go sideways, and that's what you're trading, then there is no breakout concept that's even available. So when I say breakout, this is never a breakout to me because it can't be a breakout because of the way the setup was. So getting to the level of understanding that you know the difference. Can you just fathom? And many of you know, I understand, I appreciate it. Many of you understand what I'm saying. But if some of you are kind of squinting your eyes saying, well, why didn't you go along there? Can you just fathom the difference between, here's a chart, and some people would consider that a long, and I'm telling you it's a short? I mean, what a difference, right? And as I said on one of these slides, I don't always get it right, but if I don't, I try and understand why, and I get it right most of the time because I understand. But charts are all about odds. It's about probabilities. It's not about absolutes, right? Anything can happen on a chart. you know, because we're trying to monitor, the picture of bigger money. And the thing is that bigger money can change all of a sudden, right? I mean, you just don't know when the fireman's pension fund with $1 billion under assets decides, hey, we want to go long Crocs shoes, and they go to buy 1 million shares. Well, you don't know when that's going to happen, and that can change a chart. So stuff happens. But in the normal flow of things, where there's people buying, people selling, and even big money buying, big money selling, you get a pattern that you can discern, and that's what we do on a normal basis. Back to a soft topic. This is number 6, I think, or 7. Not reviewing what you do, a review issue, discipline. The most valuable information you have available to you, even more valuable than your education perhaps, are your past trades. That was a pretty powerful comment, wasn't it? Could be more valuable than your, why do I say that it could be more valuable than your education? Well, because you can get an education and still fail miserably if you don't learn it right, if you don't review what you do. And I could see somebody self-teaching themselves. If you're going to self-teach yourself, guys, this is the only thing you have at your disposal, right? It's kind of the trial and error method. You go, you do some stuff, you see how it works out over a few trades, and you kind of come to learn, that wasn't quite right. Let's try this, and keep adjusting things. And if you could actually jumpstart with a really good education that teaches you where everything goes, and then follow up to see if you're not doing the right thing, if you're doing something wrong, if you're doing it right but it's not working for some reason, that's where you really fine-tune what you're doing and really, really learn very well how to trade. But I got to tell you, I know a lot of you do, I'm sure. A lot of you are successful. A lot of traders who struggle, they just don't even do this. I have no sympathy for somebody at all that's struggling, that can't even tell me anything about their past trades, running no stats at all, not keeping track of anything, not printing charts, just simply says, yeah, well, last week, I had all losing days, and it just doesn't work for me. Well, if you come to me with more information, I got some sympathy for you. When you just simply don't know, don't care, and just go on to the next day, you don't even have a chance of improving, whether you're educated or not. Not reviewing what you do, discipline. What to do? Many of the issues have been discussed in past events. If you're a seminar student, you have a full videos on each topic on your resources page. But the general concepts are not hard. It involves printing charts and involving trades, tracking, and analysis. Again, I don't want to spend too much time on this because it's been discussed. But there's just 2 broad concepts that you want to do. Is number 1, you want to see if you're doing what you're supposed to be doing. That's what printing charts is about, right? And it presupposes that you have some kind of a trading plan here, right? You have something on it. You have some concepts of what you want to do. And then you print out those charts and you see if those charts and what you did that day, that week, matches what you said you're supposed to do. Is this the setup that I was looking for? Did I get the right type of entry on this setup? Did I manage it properly? Did it get to its target, and was I in the trade when it got to its target? If not, why not? These are the questions you have to answer to see if you're even doing what you're supposed to be doing. But then there's a second question. You could be doing exactly what you're supposed to be doing. Perfect, right? A+. But you could still be failing. And why is that? Well, that could be because what you're doing is just wrong. I mean, obviously you came up with some concept of what your strategies are, and perhaps your strategies are just wrong. They're just silly. They're just stupid. They just don't make sense. Now, that's hard for you sometimes to judge, right? If you look at your trades and you have 3 losing trades in a row that are the same basic setup, it's a tough question. Is this a good trade that failed 3 times, or am I doing this wrong? And if you didn't know you did it wrong in the first place, it's probably the case that you don't know if it's wrong now. The student can't judge the student without a teacher there. So it gets to be tough. This is where, feel free to send me something. If you've just got a pattern that's not working, you're not sure, want a second opinion on it, feel free. But these are the 2 parts you have to do all the time. Day trading, long-term trading, continuously until you just feel you're so good you don't need the review because you're doing it right all the time. You're at that 4th level of learning where it's just a reflex. You just know exactly what it is. Questions so far? I feel like I've been just kind of talking a lot tonight. So this is not reviewing what you do. And then the next one is reviewing what you do and simply not changing. This is another big one. Big, Big one. I've seen trading plans that are written that just sit in desk drawers or on the computer, never really looked at. I've seen review process happen and acknowledge what you do, and then it's all done again wrong the next day. Nothing really ever changes. And sometimes there are those psychological issues that you just can't get it right. Sometimes it's you don't have the chart knowledge or confidence to do the right thing because you're just not sure enough all the time. But again, if you're not going to change, and this is where it becomes this pure discipline at some point, right? This is not really a technical thing. This is just that you have done what you're supposed to do in terms of reviewing, and now you're refusing to make any changes, right? Purely discipline, never checking the losers, never writing a plan and never following it, writing a plan and never seeing if you are following it. And there comes a point, I just gave you a little foreshadowing of the answer, but there comes a point, we can sit here and dilly-dally, when you have psychological problems, and we can sit here and coddle it and say, yeah, gee, do this and do that, and do this and do this. But bottom line, there is really only one answer to psychology. What is that? When you just can't get yourself to do something, what is the one answer? What's the one answer? We can put all kinds of nice words around it. And if we're sitting down together, we could talk about, getting more confidence and starting off small, that good stuff. But it comes down, there's just only one thing really that wipes out psychology. What is that? Well, I'll give you the hint. There's the hint. All psychological issues could be erased if you could just wrap your mind around just doing it. Yeah. And if you want to put an added word in there between just and do, feel free if that helps you. But sometimes that's what it comes down to, right? I mean, there are people that just never will do it. It doesn't matter. You can come up with all the little side toys and trinkets to try and get them to do, but it just doesn't matter. It's the same thing. It's not different than dieting sometimes. You want to diet, just do it. Just simply do it, right? It doesn't matter which one you even do. Just do what you want to do, and it's all just mind over matter. What just popped in my head, and I've never even mentioned this. I don't know why I'm even going to say it now, but it just because this whole thing about just doing it from a psychological point of view. I remember my mom used to smoke years ago when I was a kid. And I still remember this day. She walked in, I was maybe 16 or something. She walked in the house. She'd been at the doctor with my dad. They both had this weird look on their face. She smoked. My dad went around and collected up all the cigarettes in the house, put them in a bag, took them in the garbage, and she never smoked again. Never. Just that was it. Just instantly. She didn't have a last cigarette. Before she went, obviously the doctor said something to her. I never heard the details. She was fine. Nothing happened to her, but scared the crap out of her, and that was just the end of it. She no last cigarette, no anything. Never ever wanted, looked at, or did it again. That's a scare tactic, but if you want a scare tactic in trading, I mean, if this is what you want to do for a living, the discipline comes part and parcel with it. You have to build some kind of a process in to get yourself to do what you need to do. Being dragged into a spot where you're trying to maybe break even. It wasn't long ago I mentioned this one, so again, this is a little bit of a review thing. But this again is another one of these little, and this is the last one, by the way, so if you have any questions, feel free to start throwing them out there. But any trader will have winning and losing trades. A profitable trader over time either has to have more winning trades or bigger winning trades or some combination of the two, right? Common sense. You don't have to have more winning trades, but if they're not more, they have to be bigger, right? Something has to make you money. By learning and gaining confidence, good traders don't change everything due to fear, right? Now, it's not to say you never change. You change if after multiple trades a pattern develops that you need to change something. But new traders feel the need to get even if they ever start off losing. Again, it doesn't matter if it's a long-term account or day trading, right? And they gear their management around that, consciously or subconsciously. So what happens sometimes is, like I said, you may have a trading record where maybe you have kind of a bigger winner situation, and maybe you get 1 in 3 trades right, and the third trade makes 3 R's, so that every 3 trades you make a full R, and that's great. That's great trading, right? But the problem is if you're new and that's what you're starting off with, if you start off with a losing trade and then you get another losing trade, and here comes the winning trade that's going to make your day, so many traders have a tendency to say, well, you know what, if I just kind of sell it here, I mean, if this turns into a loser, I'm really in trouble. And right now, I'm almost break even. If I just sell it here, I'll be even and I can start all over again. Well, once you subscribe to do that, now you have a problem, right? What gave you the right to do that? That's a good way to think about it, right? You have a losing trade, you have a losing trade, and the next one you're managing according to the way you're supposed to manage it. And all of a sudden, some idiot steps up to the plate and says, well, you know what? If you sell that here, you'll be even for the day. Doesn't that sound good? Because you're down too. But what gives you the right to even think that way, right? What gives you the right to even think that way? Nothing. That's the psychology. That's where the problem started. And once you subscribe to do that, think about what you've done. You now have the goal that you may not even obtain of trying to break even. And again, a lot of times that comes from lack of confidence, from not understanding that, hey, if I let these 9 trades play out over the next 3 days or whatever it is, boom, I'm gonna make my weekly goal. I'll be all set. But then you step in out of fear and start changing things, not because anything went wrong, just because you happen to start with a losing trade or two, right? Any questions? I wanted to finish up 5 minutes early. I'm actually 10 minutes early because I just want to bring up one other little news topic here. You've not actually received the email yet. There'll be one coming out maybe beginning of next week, end of this week, don't know. But the DTS Home Study is here. I know a lot of you have asked about it, and there's a couple slides here just about it that are actually part of what the seminar people get. But the DTS Home Study, it's part of the seminar program. It's not a separate program. And so it's an additional concept. So in addition to attending all the live classes, you also get a home study. This is a professionally done, Fortune 500 companies use this software. It's done in a way where you have sections, you can listen, come back, start and stop. There's quizzes. The whole thing is all set up. It's been a great rollout. Everybody's loved it. And it is a supplement so that you can attend both live and also these. It allows you to have the best of both worlds, but also there's a second aspect to this. There's a lot of people who were hesitant to take a seminar program because they feel they're slower learners or they need a lot of repetition. Here you go. There's some people that can't be there on a Saturday. Here you go. There's some people that live in other parts of the world, not a good time for them. Here you go. I definitely do prefer, well, you can read this here, pros and cons. Attend all the live classes you can, review using the home study, view the entire home study at least once between live classes, go back to the review and answers. Also for people who cannot attend live classes on a regular basis, the home study will teach the entire course, but you may miss some of the benefits of live. As it turns out, the home study is actually 110% of a live class. What I mean by that is I always tell people in the seminar program that, I teach the class, there it is. But if you come to 6 classes, because of the fact that I may get a question, I may go down a certain road in more detail, over 6 classes, you probably get 120, 130% of the material that you would in any one class. It's just the way it is. And the home study is actually kind of like that. It kind of incorporates almost everything. So it is more than any one single class typically, not less. So it's good in that respect, which means also that if this is all you can take, I think you'll be fine. I really like people to take a live class. These are the reasons why, if you're really disciplined, the home study is fine, but there's a lot of research that says that being there live makes you learn better. So, if you can do both, it's great. But if you've been coming live, you get the home study now. If you can only do home study, I think you'll be fine. The first class is already distributed to everybody. It's done. And the other 2 classes will follow about 30 days apart, approximately end of October, end of November. I forgot what the exact dates were, but it's all going to be done by Thanksgiving. And then beginning of next year, the options class will also go on home study, and probably the intro class will also, okay? You guys are a super quiet group. I know this was it was some technical, some not technical. I just kind of did a lot of talking. I didn't have a lot of questions for you tonight. Let me ask you now, any questions or anything you want to talk about, anything at all? Also a reminder, if you need money for day trading, there is a program that is not done through me, but I can refer you to a prop trading account where you can be trading $50,000 worth of capital in and out as a day trader with only $5,000 deposit that's put down. And your money is safe here in the United States. No programs, no licenses, nothing special needed. So email me if you want to find out about that. You can do that in coordination with the seminar program if you want to, but you don't have to. They're not tied together. No questions? All good? We're going to finish 5 minutes early. This will be a first time ever event. Thanks, guys. Have a great evening.